Good evening. It's March 2nd, and the February data is all compiled. So here I am, Rob Janasic of Coldwell Banker, giving you an update on the Charlotte real estate market. To refresh, if you didn't see last month's update, this is the area upon which the data is represented, and it's all types. It's single family, townhomes, condos, co-ops, etc. All sales of real property, not commercial, just residential. And it's a 14-mile radius from Uptown Charlotte. Again, I picked that area because it has enough of a representative sample while still allowing the downloads from MLS for me to compile my homegrown database. In this database, I have collected fields such as listings and contracts and closings, your typical real estate events. We're going to keep track of the original list price, the last list price, and then the close price so that we can see trends in pricing. We're going to look at discounts, as in how much did they get off list price? What was the list price retention? Keep an eye on seller contributions, although I don't have high faith in the data that's being pulled out of MLS that's truly representative. However, with the inaccuracies of it, you can still see a trend within it. So just whether or not it's on the rise or on the decline, but we won't read too much more into that. We will read into a lot about new construction data, how many new construction homes were sold, and what was the percentage of the sales of the month that were new construction. And we'll do the same for cash, because those are two critical market indicators if you're going to comprise a list of indicators on how healthy the market is. You can see when people are pulling their cash back, when they're infusing it, when they're making right now with financing being a challenge because of the higher rates. Um, you would think that maybe they wouldn't be as inclined to be affected. New construction, people are reluctant to put homes on the market where you need inventory from somewhere, so it's new construction. However, they are being very hesitant as about new starts. They have a high rate of cancellations. That's data somewhere else. That's just me studying the market. So if we take those as truths, new construction is the leading market indicator when they start to lower prices, when they start to offer incentives. You see the rest of the market kind of follow suit. We're going to take a look at price per square foot for all these properties. Now, it would be true that if a lot more large properties sold one month than the next, then you would expect the price per square foot to go down and blah, 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 blah. I could talk you through all that maybe in another day. But what you're supposed to get out of that is that price per square foot can fluctuate from month to month, but if we use enough data, we can look at it for trends on increasing and decreasing, uh, which is different than looking at list prices and stuff like that. And then finally, days on the market, the time on the market, huge indicator of how that market's going. So that's where we're headed. Those are the fields that are tracked. So without further ado, taking that database and then plotting on a month-to-month basis. And this looks like it ends at January, but it doesn't. If you look over here, you could see that it does go into February. So February data is in, and you can see the seasonal fluctuations here that are normally experienced in the market, but it definitely feels like we're at a lull here. In February, we're usually on the ascent over here, on our way up. In February, on the ascent. February, on that way up, right? Like it's like clockwork. You could almost set your calendar by it, right? Well, we're I don't know if we're on the way up there. And those are listings. So the blue lines are listings, and listings are down here. I don't know, what is that, like 1,300, 1,250, something like that. It's a relative low. Yes, it's true. People are more reluctant to put their homes on the market right now because there has to be a need, right? Like they're not going to go ahead and cash in their low interest rate home for a higher interest rate home. So what we need is people to be on the move for some reason, like they had quintuplets, or mom and dad moved in, they're taking care of them and they need more space, or they were busting at the seams already and now it's just, well, this is the new reality. So anyway, all those reasons, people are reluctant. But the good news is, if you need to sell your home, what we're going to see is it's a great time to put it on the home, because supply and demand still dictates real estate. And right now, with listings being at a lull, there's still a low supply, lower than in recent history for sure. All right, so the orange are contracts. Well, that's a nice little little signal there. That the number of contracts in February is up here over 1,500. And while that's not setting any records, right? We're usually up in this range. It's nice to see that it's on the ascent, right? There is a pulse in the real estate market, and it's actually better than that. There's more than a pulse. I can look at data and talk to you about data, but then I can also talk to you about what it's like to be out there on the front lines and bidding and getting into multiple offers right now. Good listings, and I feel like I'm qualifying it with good, like it has to be perfect. No, just like areas that still have high demand, have a low supply, and there are people who want those homes, people who need them, not because they're moving from their house to another one, but because they moved in from out of town because they were renting for so long. And this is the reality. So, yeah, the sales are happening. So that's the great news. If you want to sell your home, you can still get prices that, seemed like ridiculous a couple of years ago, but that's where they are. All right, and then closings were at a fairly low here too. All right, so then we come to this one, the percent of original list price retained. And you can see that normally, in an average in 2018, 19, it runs pretty flat, right? With some fluctuation. And then all of a sudden in 2020, things started to get a little wacky around COVID, right? That's when things got wacky, and they stayed wacky. And we're up above 100% here, right? Like, that is the original list price. If they got list price, it would have flatlined here, but no, we were getting above list price all the way up to 102, or over here 104% more than list price. But now we've dropped and we're down relatively low compared to normal, normal steady state is what I would call it. We're coming back up to that steady state. So that's a good sign, right? Maybe this is the bottom, and maybe we're going to go ahead and fluctuate just like we did here and have a normal, healthy heartbeat. All right, so this one is days on the market. Days on the market, and you can see I could put probably a straight line right through here. 35 days, that's what it would be. You want to get enough exposure on the market to go ahead and get the right buyer, right? I don't want to get into what's a house worth, because it's worth a range, and a range is not obtainable every single day of the year. You have to have some time on the market in order for the buyers who are coming in and out of the market to see yours, and to have the right buyer who says, wow, that is the house for me, and I'm willing to go ahead to a higher extent than others, meaning a higher price, and purchase that home. So a home is worth a range, and you have to perhaps be patient and leave it long enough if you believe that it has those features that are going to drive somebody to want it more than others at a highest rate. You got to leave it out there a little bit, perhaps, or maybe get lucky, right? Now, the last couple of years, they were out there like piranhas, and as soon as you threw it, they all went, and that was a great way. But that's not how it always is. We're returning to a normal, healthy market where you should expect right now it's 48 days on the market. I don't care how good your agent is. It's not like you're going to force that sale. You have to have that exposure to get the right price. And the right price is being had. We're still at 96%. So what you listed at, which is people are listing it what the other one sold for, but they're getting 96%. That's kind of like a 4% decrease. Yeah, market has eroded a little bit, and it can show right there in the percent list price retention. But again, we went down to a lull over here where we had under 10 days on the market. You just put it out there, the piranhas snapped it up. You got bidding wars, and you went above list price. We saw above 104% of list price. But now we have retreated, and right now we're on the ascent. We'll have to see what this is. February right here. This is January, and this is February. We're at 48 days on the market. Who knows what the next is going to be? I don't think it's going to go up that much. I think we're going to start to level off. And I say we're going to level off because you saw that there were nearly 1,400 contracts this last month. So that is going to mean that things are selling, and therefore the days on the market should not be accruing that much because the listings aren't going up that much. Those are relatively low. So you got very, very, very interesting dynamics happening. All right, here we have our price per square foot. Price per square foot, and here we have some kind of healthy trend, and then all of a sudden, oh my gosh, a little unhealthy, and then COVID, it got a little more unhealthy, and then the frenzy started, and then we had 7 consecutive months of a decrease until this month here, February. We went back up to December's 229, I think it is 229 a square foot. So again, things are aligning and showing some kind of trend towards normalcy, albeit different interest rates and different mix of who's buying in the area, right? Like, again, it's not people just saying, you know what? I think we'll sell this house and just buy another one for whatever willy-nilly reason. There has to be substantial reason right now, or you got to be one of those cash buyers. You own your house outright, or your note is so low that the higher interest rate is just not that big of a deal to deter me from getting the larger home that I want now because my salary has increased and blah. Making stories up here, but those are the profiles of the people that are out there. All right. So here we have a trend line showing, and yeah, we're kind of coming right back up to where that trend line is. I think that trend line's a little aggressive. I think it should be a little flatter, right? But they say Charlotte's a value. People, I mean, you can for 600,000, you can get an amazing home that would cost millions in so many other markets around the country. So I could see why people still want to flock here. All right, now we have the number of cash sales, or actually this is percentage of cash sales. And I have these same ones coming up, but I don't want to just gloss over it. So let's take a look. Typically 18% is what the cash sales are until the pandemic happens, and then everyone holds their cash, right? So that's why it dropped. And then it increases back up again when the frenzy starts because, hey, let's invest some money. Everybody is flipping homes. People were buying homes just to put them right back on the market, $50,000 more, because that's the kind of insanity that was happening. So yeah, the cash was out in full force all the way up to about 30% of the market. And now we're, again, another trend back to normalcy. We're still a little bit high. Yeah, but we're high because sales are low. So this is the percentage. In fact, that's going to be obvious when we look at the number of cash sales. Here's the number of cash sales. I mean, that's not encouraging news right there. That number down there is around 200. Last month, it was around 180. Those are really relatively low numbers over the last 5 years. But the percentage is pretty high because it's a small number of a larger but small number. All right, so there we are. Percentage, you can see it is kind of returning to some kind of a normalcy. All right, this is number of new construction. And there is a cycle to this. If you watch the last video, you can see that cycle that we talked about. But there is definitely another trend here in that the number of sales are low, right? Even new construction. So all the sales are low and new construction. However, new construction still has a pulse. So it made it a larger percentage of the total, which is what we were seeing before. So here's that new construction percentage is on the increase. And I think it'll stay on the increase. I think with the lack of listings entering the market, unless this news that you're hearing here inspires you and makes you want to call me and say, you know what, let's go ahead and get what we can get for this house, right? While the market is still churning along. All right, so new construction percentage. That's about it. So we covered new construction sales. We covered cash sales, which don't care about our financing rate, but are to people who are very discerning and careful about how they use their money. We looked at how much of list price is being eroded. We looked at the longer days on the market. But overall, I think we see at least a pause in the negative trends. And that happens to coincide with some kind of historical averages for relatively healthy markets. And I don't even know that we can call anything that we've seen in the last 20 years healthy. It's been all kinds of upside down and inside out. So anyway, that's my market update for February. If you have any questions, please do give a call and I will go ahead and put that information up there. There's my phone number, and you can reach me at robert.janasic@caldwellbanker.com. Thank you so much.